Joining us today is Mahesh Murthy of Pinstorm, also with us Kashyap Deora of Hypertrack, and of course Manish Maheshwari, former Vice President at Flipkart and now with Network 18. Gentlemen, thanks very much for joining us here. Manish, let me start by asking you, because you've had experience at Flipkart, given the fact that we've seen so much back and forth between the Snapdeal founders, its board, as well as Flipkart and its board, it seemed fairly clear in the last week, 10 days, that perhaps this was going to fall through. One, of course, as Kritika pointed out, is an issue of valuations, but the other seemed to be the onerous clauses in the term sheet that Flipkart insisted on.
Yeah, so I think you're right. I think, as you and Kritika mentioned, I think the terms around non-compete and sort of the indemnity, two-year indemnity, seem to be way too much for the Snapdeal team to take, and I think that's why it's not going through as of now. Having said that, that basically means that Snapdeal would have to figure out what they would do and sort of who would fund them and where that would go. And I think it would be interesting to see who are they able to get to fund their plan B and sort of run that business. Otherwise, they might end up doing even more of a fire sale sometime later. Now, in my heart, I still believe that this is not the final act, in the sense that there could be something more in the offing. And it could mean that Flipkart might come back with a less onerous term or might drop some of the terms, because I don't know if they want Snapdeal to still continue and create a distraction, or would they want to sort of focus their game against Amazon. So it remains to be seen. I think what's very ironic is that while we are talking about the biggest online e-commerce deal, the parties are negotiating like you would negotiate in an offline retail environment, where you first make a lowball offer and then the other guy comes with a better offer. Then you make you pretend that you're walking away, hoping that a better offer would follow. So it remains to be seen whether this is the final act or there is one or two more acts left in this play.
Okay, Mahesh Murthy, do you believe that this is the final act, or as Manish was pointing out, do you expect that this is just another negotiating tactic? And what does this tell you about Flipkart's appetite for really going forward with this deal? In terms of valuations, there has been a significant mismatch. You send in a revised offer, which is not entirely an improvement over the previous one, and then these onerous clauses. What does that tell you about Flipkart's willingness or appetite to really absorb Snapdeal?
So I think, a couple of things here. One, this is almost like one of those legendary tales where the two princes fight, leaving the way for the king. The 800-pound gorilla. Elephant in the room is Amazon, which, the more these two fight and don't merge, it just leaves a clearer path to Amazon for success ahead. But looking at it, it's really not conscionable to expect in this day and age to have non-competes from people who are exiting, especially in e-commerce business. So my sense is lowballing and the onerous terms out there were kind of Flipkart's way of telling its board, look, I'm making an offer, but I really want it to fail because I really don't want to be making the offer. You must understand, as a background to this, SoftBank is kind of rumored to be ready to invest $1 billion in Flipkart if Flipkart picks up Snapdeal, because 1/3 of that $900 million is actually Snapdeal, is what belongs to SoftBank out there. So it was just looking to make a consolidation out there. The second thing is, the second possibility is that, given that there has been various clouds of subterfuge around earlier avatars of Snapdeal and GoJavas and allegations of impropriety and money being leaked and so on and so forth, the indemnity clause was what probably set them off, because they were looking to say, okay, let's get rid of this. There's probably several skeletons hidden there, and let's find a clean place. And once they figured that while they might get the money, they were not rid of the liability, that would have been probably another killer clause out here. So I'm really not sure which other funder is going to come in or acquirer is going to come in if they're not going to take the liability. The third point, which is really interesting, is that if Snapdeal is now there saying, look, I can go it alone, then what was this entire issue all about? Why were they furiously fundraising? If they have only about 500-800 crores left in the bank, and they were losing 60 crores a month, and even with the current layoffs, they'll lose about 30 crores a month, that would probably give them a year and a half or two worth of runway. So something has to happen, because they will not be able to, I believe, hit cash flow break even in that period of time. So there will be another act to this play.
There will be another act. And Kashyap, I want you to pick up on the point that Mahesh was making there. And while Kunal Bahel, in his letter to employees, has talked about Plan B and getting back to the path of profitability and cost reduction and so on and so forth, how easy is it going to be? Perhaps the free charge deal has given them a little bit more room. It's given them that additional runway. But they are going to have to look for other options, because given where they find themselves today, do you really think that Plan B is a viable long-term possibility?
Well, I mean, Snapdeal can always stay small and survive. I think money goes really far in the Indian environment. But I think staying small and surviving is not going to be congruent with all the money they've raised so far and the investments that they've put into building Snapdeal. Now, look, if you look at this from a SoftBank perspective, there are two options. Either to salvage the Snapdeal investment or to write off the Snapdeal investment. It doesn't look like SoftBank is going to bet on Snapdeal again as a reasonable possibility. So in absence of that, Snapdeal to really compete with the big guys need a deep-pocketed investor, and I don't know which investor will support them. So it really comes down to, are we betting on SoftBank being so inclined on the deal to invest in, to salvage Snapdeal, that they will, work with Flipkart to try and make this deal work, or it's just so complex because of so many skeletons in the closet, like Mahesh said, that at some point SoftBank will be forced to just write it off and move on.
Yeah, you're saying that SoftBank may be forced to write it off, but what about the minority shareholders, Manish? People like the Premji Invest, etc., who have decided to reject this deal. How do you explain them walking away from this particular transaction, this proposed deal?
Yeah, so in my mind, it seems like they were anyway not in favor of this in the very beginning, and SoftBank was the one sort of the major driver of this. Now, in the other scenario as well, it seems like they would hope that some kind of exit they would get at some point, which would probably be better than this kind of exit. And I think that's the only hope they have. And if in the Plan B, Snapdeal would have to figure out what is going to be the exit for these people. If Snapdeal is not able to raise money and grow big, it is unlikely that a quick exit will come for these people, other than IPO at some stage, and that's the only exit that they can expect. So I think it'll be interesting at this point in time. I still think that SoftBank would have to make an intervention here in a way that it could sort of cause Flipkart to make this acquisition by sort of dangling a carrot of some kind. That's what I think will probably happen.
Okay, so you still believe that there is a possibility that Flipkart will dangle some carrots. But Mahesh Murthy and Kashyap, let me give you the final say now on this. There was another suitor in the fray, and that's the listed company Infibeam. In fact, the only listed e-commerce player in India. Now, what we are given to understand from sources, and this was, our colleagues were reporting this, Priyanka Sahai, etc., that Snapdeal founders were actually in favor of doing that deal with Infibeam because they were assured management positions. Do you believe that perhaps we're now going to see a return, maybe now or a few months down the line, of a different suitor, and that being Infibeam, which seemed to have lost out in this round? Mahesh.
So I think, a few of the red flags that will go up, but while the Infibeam deal is a possibility, the Infibeam shareholders will have to figure out, do they want to take on such a huge loss? Because essentially it's not accretive to the balance sheet. And what's the cost they're paying? While it was very clear that there was animosity between the Flipkart and the Snapdeal founders, and the Snapdeal founders were going to be out of the company, it may well be possible that they could still run as a public listed company and have another 4, 5, 6, 7 years to be able to redeem things, given that, assuming they were able to find places to hide skeletons under carpets and in closets. It's possible, but it's not going to happen at this price, because this bugbear of indemnities for future is going to come up, and no public listed company is going to take that risk. A private company can take that risk, but somebody like Infibeam or any other public company is not likely to take the risk of any kind of non-compliance that's happened in the last few years at Snapdeal.
A quick follow-up question to Manish, and perhaps Kashyap can add to that as well. Manish, if we were to assume that Snapdeal doesn't go ahead with an investor at all and goes through with what they are calling in their release a non-core asset sale, an asset-light platform, do they have those non-core assets? There is Unicommerce, there is Vulcan Express, Freecharge has gone through. So if they do go ahead with the sale, is that going to be enough? And they've actually said that they will be able to get gross profits by this month.
Yeah, so I think the plan they are proposing is to create a marketplace, which is the whole Taobao structure, which is basically they would not hold inventory, but they would sort of enable sellers, any kind of sellers, C2C sellers as well, to list on the platform and start selling. And they would make money through commissions and sort of sales, other associated fees. So technically speaking, yes, I mean, that's an asset-light model in the sense that they don't have to invest too much working capital. And as the sale starts happening, they can start getting commissions and fees from the sellers. And sort of that plan could work, provided they have a good reputation in the market and there are enough sellers to list on the platform and sell it. Now, having said that, they are playing in a market where there are already two big players, Flipkart and Amazon. So how likely are sellers to list on a third market? And are there unique set of sellers out there who are not able to list on the other two platforms and would come to that? That remains to be seen. So that is what they are hoping for. Now, it remains to be seen how well they can execute, because they might say that there is a long list of long tail of small sellers who probably are not able to list on the bigger platforms and would probably come to their platform. And that's a possibility, but it's going to be a far-flung possibility, and they would have to put in a lot of effort to really make it work.
But they can do it without an investor.
They would need some investment, and I think what my view is that probably they are hoping that the kind of investment, the money they having with the sale of, say, Freecharge and the other assets would be able to pull them off for the next couple of months, and they would probably be able to raise some money. Whether it would be SoftBank or someone else, that remains to be seen. But I think in my mind, they would need money to really pull it off, because these are network effect businesses. And to really become big and really matter in this ecosystem, they would need to spend some money on acquisition as well as retention of these sellers to be able to make that asset-light fees as well. So they may not have to invest in sort of hard assets, but they would have to invest in acquisition and retention plans. And sort of that will require money as well. So it remains to be seen how they're able to pull this off.